Hello and welcome to the Shadow Traders training program. My name is Melanies, and in this video I'm going to be showing you how you can use other time charts to give you an expanded view of the market to really narrow down the trend changes from your fan to your fist back to your fan to help you execute your clear trades and 13 EMA gap closes for your cookie cutter strategies. Now just as I've said before actually, in the earlier videos, you can use the 1 minute and the 3 minute for making your entries, and you should have something like the 10 minute and a 20 minute on an external monitor to help you give you an expanded view, and I'll go into that in more detail. I'm presently using the 6E market, but as I've said before, you can do this with any market. You can also use a 5 minute and a 10 minute, but I'm going to use the 10 minute and 20 minute for this example. First, let's take a look at the 20-minute time frame. The reason I like the 20-minute time frame is that you will notice that in a snapshot glance, it gives you from the start of the day all the way to the present. So you can see in one chart the entirety of the trend for the day. You can see up to this time frame. Right now it's just after 9:30, so we can see that from when the market after midnight, when the market started the new day, we can see the entirety of the trend. And that's the nice thing of having a 20-minute chart, because it gives you the broader view, the broader picture of your moving averages to give you the trend changes. So as you can see, in the early hours of the morning we came out of its fist and we had a small breakout here. Then we had a gap close crossing over, changing direction to ultimately give us a small bullish fan. The 200 is at the bottom, the 100, the 50, the 20, and the 13 moving average. And on this note, I actually have to tell you that the 200 moving average that appears on the chart is not the true 200 moving average. The only one where it is true is on your 1 minute chart. You need to remove that to have it be correct. So what you need to do is you need to right click, go to indicators. In the bottom box is everything that's on your chart. In the top box is anything you could possibly add. So what you want to do is locate the simple moving average close 200, select that and click remove, apply, and OK. Now you have a correct view of the market because the 200 moving average that's there is not true. Now what we want to do is we want to transfer the 1 minute 200 moving average onto this chart, because that is the only true 200 moving average. And how we do that is you right click, go to strategies, and you'll see where it says draw SMA 200. Select that and click new to bring it into your bottom box so it'll appear on your chart. Now notice, if you look at the parameters, it'll have the incorrect date or the incorrect market. Make sure that you match the market and the date. So right now we're dealing with the 6E, so we want to change this from an ES market to the 6E, and make sure you have your caps on when you do that. 6E, leave the space. You have to do it exactly as it was before. Now I'm going to change this to 610 to match the current chart. Now you click apply and OK. Now you see the dashed dot purple line is actually the true 200 from the 1 minute chart. So now you can see where the market was sitting on the 200, and that's why we had the small breakout. It didn't last very long because the market likes to hug the 200. And then it finally crossed over, but now you can see that it's been sitting on the 200 for quite a while. So let's continue. I'm going to show you how you can use your 20-minute chart to give you the overall picture of the trend. As you can see, we're now approaching a small bullish fan, and we had the cross here. We had a clear trade going up. We had a small gap close. We had another clear trade going up. We had a small gap close, and a third clear trade going up. So we've had one wave, two waves, and 3 waves coming down to change direction. So you can see how from the earlier video when I talked about the clear trade strategies, how the same strategy can apply on different time frames. If you are a trend trader and like to just trade on the 20-minute and 10-minute chart, you can do so and do the same exact strategy. Just know that inside these candles are other retracements happening that are magnified on your 1-minute chart, but you may not see it clearly on the 20-minute chart. So therefore you have to have your stop loss allocated accordingly for those retracements. Otherwise you'll get stopped out. Because remember, a 20-minute candle is not going to show you the chop that's going on. It's going to look a lot smoother. However, there's a lot of retracements going on within inside the candle. So be careful of that and make sure you have your stop loss set accordingly. So let's scroll back and see what the other days look like. As you can see here, I'm going to condense this a little so you can see the entirety of the day. As you can see here, we started out from midnight and we had a nice fan coming down. A small bearish fan, but with a nice clear trade right here. So as you can see on the 20-minute chart, we started our clear trade right here. We had the cross, the candle touching, and as you can see, the price continued lower. This would be considered a good entry right here for your clear trade to make your cookie cutter strategy and get out of the market. Then we had a very nice gap close on the 20-minute chart. You can see there was a lot of divergence, and as you can see, your Linreg crossed back up, and we had a nice gap close as it crossed over and penetrated. It did hang up for a little while here, going sideways, and it took its time before it finally crossed over to give us our new clear trade in the new direction on the trend change. So as you can see, this cross right here with your candle touching would be your good entry, or the second candle would be a good entry to make your cookie cutter strategy and get out. Then we had a gap close coming back. The Linreg turned and told us we had a lot of divergence, a lot of separation. Nice angle on the 13 to give us our nice new fan, going from a bearish fan into a bullish fan. And you can see here that it came and touched the 30 moving average and then broke away for your new clear trade. So here we have the first wave completing to touch, then we have the second wave completing to touch, and you can see here is another great entry for your clear trade. So in this entirety of this trend, we've had 1, 2, 3 waves, and let's continue to see how they changed direction. Actually, we continued a little higher, and we had a last ditch effort, the fourth wave, and a tiny little ditch effort over here to before it crossed over and changed direction. So you can follow the 20-minute chart and you will see how this is magnified on your 1-minute chart, and I will demonstrate this shortly. But the nice thing is, if you were trend trading, you could take advantage of seeing this cross, getting in and going for your cookie cutter strategy. You could probably do the entirety of the cookie cutter strategy on this 1 and 2 entries. I would probably be taking more advantage of this entry over here. So they will be your 2 perfect entries on this entire fan. I would not be getting in here only because it's a 20-minute chart, so this candle looks like it's one move, but on the 1-minute chart it will be a much bigger move. So, but for the sake of explaining my entries on how I use the cookie cutter strategy, I tend to stay away from the 3rd and 4th waves because they tend to be short-lived, and know that you're going to get a change of direction. So you can see the same strategy we talked about earlier on the 1-minute and the 3-minute is occurring on the 20-minute chart. Now we have our direction change, we have a cross, we have a candle touching, and we have another good entry for a clear trade. Now, as I've said before, if you want to get on your clear trades early, you can get in on your, here's your EX indicator telling us we are actually closing the gap to the 13. If you got in when you got the confirmation of your Linreg turning, giving you a nice V, and you have to have a nice V on that Linreg right there, your Linreg 4, to confirm that you actually are closing the gap. Can you see the V here and the V here? When you get a sharp angle and a sharp V, and you get a lot of separation between the V and the 13, so you know that the price has a ways to go before it closes the gap. And you see this sharp angle, that means you're going to get an aggressive attempt to close the gap. This is a good time to jump in and take advantage of your gap closes. But as I've explained before, on a 1 minute chart, a gap close during the middle of a trend, during the middle of a fan, can be very short-lived. However, on this note, a gap close on a 20-minute chart will appear to be a nice clear trade on the 1 minute chart, and I will show you this in more detail as we go. This move right here is a very nice trend on the 1 minute chart. It appears to be a small gap close on the 20-minute chart because each candle represents 20 minutes in time. But 20 minutes in time, as we know, is quite a long time in the market. So you could take advantage of these gap closes on your 1 minute chart entries, whereas the same gap closes on a 1 minute chart could be short-lived. Now, if you were going to do the trend change on the 20-minute chart, you could get in on this gap close right here and get in early for your clear trade as it's going to cross. But remember, as I said, you want to make sure that it really is going to cross and it's not over here where you're going to get a retracement back up. You really want to confirm that the 13 is actually narrowing and approaching the 20 at a rapid pace and then crossing back down. So I'm going to clarify how you can narrow this entry better using the 1 minute chart and your 10-minute chart and your 20-minute chart. So let's pay attention to the moving averages and how the trend works in terms of the using the 20-minute charts to tell you your overall trend for the day. So as you can see, we started in the morning. We had a nice clear trade coming down on a fan. Then we had a gap close. We crossed over. We started the new change of direction. Here was your change of direction. And then they crossed over to give you your bullish fan. So now if I saw this, if I came into the market at around 8 o'clock in the morning, this is what I tell everybody. You need to look at the 20-minute chart first before you even start trading. Take a look at your 20-minute chart and see what is the trend looking like for the overall day. As you can see, if I came into the market at around between 8 and 9, which is when I usually open the market, you can glance over and see, oh, we're in a trend change and we're going long. So what you would say to yourself is you're looking for good clear trade opportunities to go long. Majority of your trading should be in the long direction, except if you're doing these gap closes. But the overall market so far seems like it's going to be an up day, and as it did, it was an up day for the most of all, with some small minor trend changes due to the gap closes. And then as we see, finally in the evening hours, the market crossed back down, but it was a small change of direction because look at the big trend it had to go against. We had great separation between the moving averages, as I've showed you on your 1-minute charts, and so therefore the trend change is going to be short-lived. You can see it cross right back up, and then we start the new day. Let's go back another day to see what the earlier day looked like. On this particular day, we started with a very nice bearish fan. Here is your clear trade entry right here. We've got the cross happening. It was a short-lived beginning because you can see there was no separation between the 13 and 20 moving average, as I have shown you on the 1-minute and 3-minute examples. The trend really took shape here once we got the angle and the separation forming with your moving averages. Here you can see nice separation, nice strong angle, and here is your good clear trade entry. You got your candle touching. Even if you got in on the second candle, this trend will pan out and give you your cookie cutter strategy, your 4 ticks. Now if I was looking for 2 entries on this fan, I would be making my entry here, and when it comes close to almost touching the 13 and starts to break away, I'll be looking to make my second entry around here. As you can see, we basically got one wave coming close to, even though we didn't touch the 13, it was a good effort to try to touch. So this completes the wave, the first wave. Then we had a second wave. It came back to touch the 13, didn't make it, but almost touched, made a good effort to touch. As you can see here, with a Linreg turn, we had 2 small green candles. That completed the second wave. Here is your third wave, which is your last ditch effort before it finally gives you a very nice gap close and changes direction. I would not be doing my clear trade entry here because I know that the third wave is always short-lived and that the market's going to turn on me. So if you're looking for your perfect entries on your fan, on your 20-minute chart, if you are a trend trader, you will be making your entry here, and you would looking to be making your entry around here to get your 4 ticks or your 2 points. On a 20-minute chart, you could probably comfortably go for your 2 points. On each move, on each entry, you can go for 8 ticks. Try that and see how you do. Now, on the 20-minute chart, whenever you see this gap close here, going to the 13, this is going to give you a nice uptrend on your 1-minute chart. It's going to give you the new clear trade in the new direction. And I'm going to explain that in more detail. So watch for your Linreg giving you your V, and the candle change color from red to green, and you can see that it's the next candle's higher. It's giving you a real confirmation. It's really holding to the gap close. I usually wait for the second candle before I jump into my gap closes on these particular trends. As you can see here, if I had got in on the first candle here on this gap close, you can see how short-lived it is. The market would have turned on me, and I would have been stopped out. If I had have entered on this green candle, as you can see, we didn't get the V on the Linreg. The Linreg continued down, and there's a chance I may not gotten filled, and the market would have turned on me, and I would have been stopped out. Now here we did get a 2 candle, so if you had entered on the second candle, though, the market would have turned on you and stopped you out. So that's why I say wait for at least you see the real Linreg turning, and you will get your gap close entry on the second candle to then, because notice that when you do the gap close at the end of the trend, remember I talked about cross to cross, right? Here's your first cross. Here's the start of the mini trend. Here's your second cross, the end of this mini trend that's inside the overall bearish fan of the market. Now, if you wait till the gap close at the end of the trend, where the 13 gives you the confirmation of the angle, there's your angle here, there's your angle here, and you can see that it's making a concerted effort to change direction, and it's starting to narrow the gap between the 13 and the 20 and change direction. When you see that, you know that this is, and you see that you've had 1, 2, even 3 waves. You may get a 4th, but chances are when you see this type of move that you can safely assume that the market is going to change direction, and you're going to get penetration with your candles through the 13. Therefore, you're going to get longevity of your trend on your 1-minute chart. Also note that when you do gap closes during the fan, you will see that the Linreg, this is a very good example, the Linreg 4 and your Linreg 10 go opposite each other. They're in disagreement. The Linreg is closing up and the Linreg 10 is continuing down. Whenever you see this separation between your Linreg where they're not in sync, they're going opposite, know that your gap close is going to be short-lived and it would not be a good entry. So I would not be making this entry on the second candle here because I don't get the confirmation of my 2 Linregs. They're completely opposite. The Linreg 10 is going down and the Linreg 4 is closing up. Over here on this second candle, notice that my Linreg 4 and my Linreg 10 are parallel to each other. They're confirming that they're both going the same way. They're crossed up to go the same direction. So if I made my entry here on this second candle, it will be a safe entry because I know for the next 20 minutes from this candle to this candle, 20 minutes in the market, we are going to go up. So this is a good chance to take advantage of my cookie cutter strategy, jump in and get 4 ticks on this 20-minute move. So really pay attention to your Linregs. it's an extra confirmation for you on whether to do your gap closes or not. So let's go back one more day and see how we panned out. As you can see here, we had a nice fan, we had a nice breakout, but you can notice that it was very short-lived. We didn't have the candle touching at the cross. We did have some nice price action though, because we had some good angle on the 13 and good divergence. So you could still jump in here and take advantage of this trend. Get your 4 ticks. Because remember, each candle is 20 minutes, so you could trade and get your cookie cutter on one candle. And then we had the nice V, okay, forming your Linrake. We have both Linrakes going in the same direction, even though there was a little bit of divergence here. But they're both parallel, they're both going the same direction, they're not opposite. So you had a nice gap close here, which would have given you a nice clear trade on your 1 minute chart. There you can see that was the first wave gap close. And then we had a second wave, which was very short-lived, and a third wave before we ultimately crossed and changed direction. Now the market didn't actually change direction and go higher. What it did is it came right back down to support the overall trend. Because you can see there was a lot of separation, strong angles on your moving averages to support the bearish fan. So the market couldn't really change direction here. What it did is it crossed back down real quick, and it continued. We got another wave, 2 waves, and then we crossed to go back down. So you can safely assume that there, for the most part, what you're looking for is shorting opportunities when you see this. When I see that the moving averages are going down, I'm looking to go short more than I am looking to counter trying to go long. Here you can see this is pretty much a down day. It started as an up morning, but it quickly changed to a down day. So you can see by using your 20-minute chart, you can pretty much see how the day is going to pan out. Are you looking for more shorting opportunities, or are you looking for more opportunities to go long? And let me show you the present day. Here we are in the morning. It's a pretty flat market right now, because you can see there's not a lot of angle, not a lot of separation compared to before, but you still got your nice the early hours when the market went down, and we have this nice market going up. So I'm looking for opportunities here to go long. But I noticed that we're in a direction change. So now what we're experiencing as the market opens is a down market. We're presently doing a gap close. So this gap close is going to give us a nice clear trade on the 1 minute chart. And I'm going to show you that in a minute. Now, if we want a magnified view of your 20-minute chart, what I tell you to do is go ahead and look at your 10-minute chart. Your 10-minute chart is going to give you a magnified view of the retracements inside these 20-minute candles. As you can see here, we had the same downtrend, we had the gap close, we changed direction to crossover. We're approaching a fist on the 10-minute chart. So we got a little bit, we're changing direction. So hopefully what I'm thinking is that, as you can see, we had a bullish fan. We're going to change direction and be a bearish fan, depending on how this works out. We had the first wave gap close, second wave, and now we looks like we are in a second wave gap close. So you can see that in this gap close right here on the first wave, where it came back and touched the 13, you're looking to make your entry here on your second wave to go short, to follow the downtrend. You got the angle on the 13, the separation, and here's your nice entry here. On this, there you got the V. You could get in early for this clear trade by using this gap close on the 10-minute chart. So notice that you will not see this gap close right here back to the 13 on the 20-minute chart. It's inside that candle. So that's why when I talk about using your keeping your stop loss out the way, you have to compensate for these trades. The only way you can see it is where the wick goes to. You see the top of the wick on your candle where it touches the 13? That is the retracement, and this is the low of that trend here. So from the wick to wick is where you're going to see the price action move within the trend. So you can see we hit the low here, we hit the fractal. The fractals apply on every time frame. And then we bounced and we came back, closed the gap to touch the 13. So where the wick is touching is this gap close on the 10-minute chart in a magnified view of what's going on inside that candle. As you can see in this two candles here, we had this move touching, giving us our second wave on our 10-minute chart. And let me go ahead and remove this 200 moving average on the 10-minute chart because it is not true. I'm going to add the 200 moving average from the 1-minute chart. Now you can see where the true 200 moving average is, the dashed dot purple line. Okay, let's continue. So now that you started your day, you looked at, you say to yourself, okay, well, we're pretty much in a fist, we're in a change of direction, there's a little bit of confusion in the market. We came down, we closed the gap, we came down, we changed in direction right now on the 10-minute chart. As you can see, we've got 2 candles for every 1 candle on the 20-minute chart. So because each candle on 10-minute chart is 10 minutes. So this candle and this candle is giving us this 1 candle on your 20-minute chart. Okay? So now what I'm going to show you is how to use your 10-minute chart and your 20-minute chart in conjunction with your 3-minute and your 1-minute entries. I'm going to just move this over a little bit and bring up the 3-minute and 1-minute chart. Here is my 3-minute. Let me explain the 3-minute first before I bring up the 1-minute. Let's note the time. It's now 10:20 on the, we're in the 10:20 time frame on the 20-minute chart, which means from the 9, it's not quite 10:20 yet, but which means from the 9:45 range on our 1-minute chart. Let me show it to you in time so you understand how this works. Okay, so because it's just shy of that, as you can see from here, just after 9:45, we experienced this this change of direction going up to give us a nice clear trade. We've got nice separation angle. We have a change of direction clear trade going long. Now, how could you predict this move? Well, if you look at your 20-minute chart, it's telling you it's closing the gap. So your 20-minute chart and your 1-minute chart are telling you the same story. Your 10-minute chart is giving you a magnified view of that. Let me take this back just a little bit. Okay, your 10-minute chart is telling you, look, we're closing the gap, changing direction. And our 3-minute chart is telling us we closed the gap here at 9:54. Okay, so as soon as you saw this V here on your 3-minute chart, you could have made your entry right here during the gap close, which would have given you an early entry for your clear trade. So here is your entry for your gap close right here. And you can see that the 13 is pretty much on top of the 20, so chances are we're going to get penetration and this is going to go higher. We did have a small retracement here, but however, the 13 was on top of the 20, so it looks like it's going to go higher. By the angle of the Lin reg, I would say to myself, I could take advantage, and even if I just got in here at 10:54 and did the gap close, if it didn't pan out, get out. But I could safely say that this is going to cross up and go higher, based on what my 10-minute chart is confirming. You can see that at this time frame, that my 1-minute chart, my 3-minute chart, my 10-minute chart, and my 20-minute chart were all telling me the same story. We had the V here, and we're going higher. We had the V here, we're going higher. we had the V here, we're closing the gap, and we had the V giving us a close gap. What are the chances of this having penetration and changing direction to go higher into a clear trade? Well, the probabilities are very high because all time frames are telling you the same move. They're all in sync, so therefore you can safely make your entry anywhere here, 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 and know that you can get your cookie cutter strategy on here. Take advantage of this. Now let's expand this view and see when it's not a good time to make a trade. This entry is easy to see because you can see that all four time frames are telling you the same story. Now let's take a time when they're not telling you the same story. Okay, so let's take a look at this gap close here at just after 9 o'clock. As you can see, we did have our first wave, second wave, but what happened is it closed the gap and came right back down because it wasn't able to really change direction. Now, why was this trend on the 3 minutes short-lived? If you had a thought that you were going to cross and continue higher, as we just saw here just a moment ago, why did this example not do the same thing? Well, how can you use your other time frames to confirm whether this market is going to continue higher or whether it's going to come back down, as it did? It crossed right back down. You see it crossed flat. Didn't give you the angle to give you a nice clear trade going long. So if you had got in late here, the market would turn on you and stop you out. Your entry would have been here to take advantage of your clear trade. So as I demonstrated in the previous video, if you were doing your gap close on this candle just before 9:21, here, the second candle, where you got the Linreg closing, and you paid attention to your 1 minute chart, you will see you'll be able to grab some ticks. Now know that there's a lot of separation here, strong angle. You've got both Linregs going the same way. And what you will see is that the gap is closing is going to give you penetration because there's a lot of separation on the 3 minute. But how do you know how long this trend is going to last? How do you know that it's not going to go higher and ultimately change direction? You can see that all the moving averages are giving you a bearish fan coming down. So this partnership has to cross all the moving averages and give you a true change of direction. So what you can safely assume is if you make this early entry, you get your 4 ticks and get out. But if you want to look for a second entry, is this going to give you a second entry on your 1 minute chart? Well, the only way to really know this is to look over at your 10 minute or 20 minute chart. If you notice in the time frame that was occurring, you can see that we just started the clear trade going short. We're still in the first wave. What are the chances of this trend continuing lower if we just got started? Versus at the end of the trend, as we discussed, where it changes direction. As you can see you just got the cross happening and it's just getting started. So you can safely say to yourself, well, we're in a change of direction right now, and this trend has a little ways more to go. So if you see that, you know that this gap close is not going to pan out into a big trend change, right? Because your 10 minute is telling you the bigger picture of the overall trend. This is a magnified view of inside this trend. But what's the overall trend? The overall trend is that we're changing direction and we're coming back down. And similarly, on your 20-minute chart is telling you the same story. In that time frame, we were still going short, and the trend had just started. So chances are was going to go lower. And as you can see, what that tells you is that even though we had a change in direction on our 1-minute chart, it was short-lived. It came right back down. So that's what I look for when I'm looking to use my other trend changes. So what I see is when I do this gap close, I would have made my entry here for my clear trade using my second candle on my 3-minute chart, going up to the 13. And if it's at the end of the trend, like I have said, chances are you will get penetration once you have confirmation of your Linregs and the angle is strong and there's enough separation between the candle and the 13. So we have a ways to go. So know that you're probably going to get penetration, which give you enough candles going higher. Now, if there's no separation, there's no strong angle, and the gap is closing sideways, let me take an earlier example. Like we're experiencing on this first wave right here. Notice on this time frame here and this first wave gap close on your 3-minute chart that it really didn't give us a strong separation that we needed and a real aggressive gap close because we're still on the first wave. This trend was not over yet. So what happens is you see the conflict in your Linreg. Your Linreg 4 is going up, your orange is going down. So know that this is going to be short-lived. If you got in late on this trend, chances are you would not be able to make your ticks. And you can see it just went lower. And that's what you're going to find, that where the gap close doesn't pan out on your 1-minute chart is because it's going sideways and you don't really have enough angle or separation. You can see the Linreg is opposite to the orange. It's going to be short-lived. And you'll notice that at that time frame, we really were at the beginning of the clear trade on your 10-minute chart and your 20-minute chart. So when you see the beginning, when you've got a gap close like that on your 20-minute chart and your 10-minute chart, where is this trend going? You want to change a direction, right? It's going lower. So why, if you see the same time frame, why would you expect for this gap close on your 1-minute chart to cross over and go higher when it's in conflict to your 10-minute chart and your 20-minute chart? Your 10-minute chart and 20-minute chart are telling you the new trend direction. The new trend direction is we're going down because we're changing direction. We have a strong gap close. So why would we now be countering this trend? We are countering this trend by getting in this gap close here and going long, thinking it's going to go higher. That's where using your 10-minute chart and your 20-minute chart help you to decide when a gap close is going to be an ultimate change of direction into a clear trade, or when you are countering the trend. So that's the difference between this gap close as a change of direction, and this gap close. This gap close here gave us the change of direction and the 4 ticks we need in the new clear trade because we had enough separation on our 10-minute chart to confirm that we were changing the gap, closing the gap. Okay, but it came back down because the party was still continuing lower, as you can see. We're still going lower. This trend is not over with. Let's see where how it's panning out. So here we had our first wave gap close, second wave, now we're changing direction. And it's not as clear to everyone in the 20-minute chart, but you have to look for the wicks. Here's your first wave, the wick touched, and then it came down for the second wave, change of direction. Now, if you see this change of direction, look what you're going to find. You're going to find your nice new change of direction for your clear trade going long. So if you match your 1 minute with your 10 minute and your 20 minute, and you want to see a magnified view of that to really narrow down your entries, you use your 3-minute chart. See here on this gap close, I'll be looking to find my clear trade entry on my 1-minute chart. If you got in here, you will get your exact perfect entry. 10:03 equals 10:01, 10 o'clock on your 10-minute chart. I mean on your 1-minute chart. It's going to give you exact entry for your clear trade to go long. So essentially, when you're doing your clear trades on changing directions versus on a fan, you're using your 13 EMA gap close on a 3-minute chart entry to give you the exact entry on your 1-minute chart. Now we have another example. Why is this change of direction right here at 10:20 flat? And it's not. If we got in early on the gap close right here and went for 4 ticks, we would have made it. But why, if I got in here, would it not pan out? I would be looking to get out of this trade right now, because as you can see on the 3-minute chart, we've only just had the first wave, and we're going higher. Right here, we haven't even touched yet. This is still in a change of direction to cross the moving averages to give us a bullish fan. So that is why this change of direction is not going to work out like the one we just saw. This change of direction here panned out to be a nice clear trade. See, this clear trade is on change direction. It's crossing the moving averages, because your 3-minute, your 10-minute, and your 20-minute were all doing the same thing. Right now, this clear trade, change of direction, is not going to give you your target 4 ticks, because right now this clear trade is not in sync with your 3-minute, your 10-minute, and your 20-minute. This is a counter trend, because the new trend is to go long and change direction. The new trend over here is to go long. The party's just getting started on the 10-minute chart. The party's just getting started on the 20-minute chart. We're still crossing back up. As you can see, we're going to get a new clear trade opportunity based on the second wave of your 3-minute, 10-minute, and 20-minute. And that's what you need to watch for. You only do your clear trade entries for your change of direction based on your 3-minute, your 10-minute, your 20-minute doing the same thing. When you see that your change of direction is countering what's going on in your 3-minute, your 10-minute, and your 20-minute, then you stay out of that gap close. Unless you're getting early right at the V and you ride a 2 to touch a 13, but get out. Get out as you touch a 13. And wait for the real trend to take shape. Now you're looking for, remember what I said? Your 10-minute and your 20-minute are telling you the direction of the overall market. The direction right now is we're closing the gap and going long. We're crossing, we're changing the direction, right? It takes a while to do that. So you're looking for opportunities to go long more than opportunities to go short. Now you're trading with the trend. Even though this looks like a major trend change, but it's not, because the trend is to go long. And if you scroll through your charts to really narrow down the first wave, second wave, you'll see that on your 10-minute chart and your 20-minute chart, whenever you have a gap close on the first wave, okay, let's narrow this time down, 9:20 and 9:40, right? So that means at 9 o'clock and 9:20, because, sorry, at 9:10 and 9:20 on your 1-minute chart, because it's 10 minutes after the fact. Okay, so at 9:10 on our 1-minute chart, starting here, we're looking for our opportunity to go long. right up to 920, just after 920 it started to go short, right? Started to close the gap, because that was the gap close, and we had nice separation there, and we had aggressive attempt to close the gap. So it's going to give you your great clear trades on your 1 minute chart. But if it's not conferring, it's not in sync with your 10-minute chart, if your 10-minute chart is shorting and this is going opposite, then know that the trend is going to be short-lived, as you're seeing over here. This is shorting, and this is going long. And that is how I use the other time frame charts. So practice this. Practice scrolling through the charts, picking the gap closes on the first wave, the second wave, and match it to the 1 minute chart, just like I did, and see what you see on the 1 minute chart. Go find the gap close on the 10-minute chart and your 20-minute chart. The nice thing about the 20-minute chart is if you really pay attention to the change of directions here and here, you will see that you will get your very nice clear trades. So essentially, if you do gap closes on the 20-minute chart on real change of directions, you're going to get very nice clear trades on your 1 minute chart. If you pick the time as I have, go find it on your 1 minute chart, you will see that opportunity. When it's these gap closes in the middle, you have to have at least 2 candles or a nice separation to really take advantage of a nice trend change on your 1 minute chart. If it's a very short candle, you'll see that it's very if it's a gap close on a green candle, you'll notice that it's very short-lived. See, these gap closes will work out nicely. The ones that are red going short will be nice little trend changes on your 1 minute chart. But if you see a trend change that's inside of a green candle, watch out, as we are experiencing right now. See, this change of direction was this first wave gap close on your 3 minute chart was inside the green candle. Actually, we had a red candle here, a short one, and it didn't even show on your 20-minute chart. So they weren't in sync. So therefore, this trend change was very short-lived. And that's the difference, that's the secret. See, now I'm looking to grab my 4 ticks out of this move here, because I'm approaching a second wave on the 3-minute chart. I expect that to happen, because the party is just getting started on my 20-minute chart. So I'm going with the trend. I'm trading with the trend as opposed to counter trending. This is countering the trend here. This would not be a good entry. And that's how you can, and similarly what you do is you're waiting for this 3-minute chart to finish the second wave or possibly third, give us our direction change back down, and let it confirm with your 10-minute chart and your 20-minute chart, and you will see a very nice clear trade opportunity on your 1-minute chart. So go practice that. Go find the gap closes on your 10-minute chart, your 3-minute chart, and match them with your 1-minute chart and see what kind of entries. Get used to seeing that, and then you will really be able to know when to take advantage of a trend change clear trade and when to stay out. So join me in the next video, and we're going to talk about the cookie cutter formula. And now that you are practicing your clear trades and your gap closes on trend changes, now you can master that and execute your cookie cutter formula.